Hi, I'm John Sprague with Onward Property Partners, and one of the questions that we get quite regularly, are we in a market shift? And the reality is, many of us might be believing that the seasonality in the real estate world might be masking a potential market shift. And so each year we have a cycle. And it's called the July slide. So from January to July, the number of units goes up, giving us the perception that the market is on fire because there's more of our peers that are actually in the moving process. And then from July to December, the number of units goes down. Now the myth there is that the average sale price goes down with the number of units, but that's not accurate. However, in this market, in this winter months, we do see a few things that are unique. We have an unusually cold market as far as actual temperature. And so we've got a lot of buyers that they're reluctant to go view the properties that maybe they had wanted to earlier. The other thing too is that real estate, it's a local market. It's much like a Hot Pocket. You put a Hot Pocket in the microwave, you take it out, there's certain parts, they're absolutely on fire. There's other parts that are just ice cold. So those blue chip areas that are usually driven by school districts, those guys, that they're not seeing many yellow flags right now and really don't have a grave concern ahead. Now the other areas that might be a little bit softer, we're starting to see some major impacts, and we're starting to see some indicators show up, namely in our luxury market. So that's really anything over 2.5 times the median here in St. Louis, and that is over $500,000. We're seeing that market slow down and the supply swell. So what are we looking for to identify if we have a shift? And so there's really 3 things that we want to see. One, we want to identify what's going on with our leads. The number of marketing leads that are coming in, is it going up or is it going down? If it's going down, that's a yellow flag saying that we might be entering into a shift. The second thing is that we want to see the number of showings. So for each one of the listings that we take, what's the average number of showings that we're getting per day, per week, per month? And if that's staying consistent or if it's going up, we want to see how that's trending. Then the third one is days on market, and that's the one that gives us the most empirical evidence with the highest amount of or the largest sample size, and gives us the highest certainty of what direction we're trending. And so here's what we're seeing. Right now, the marketing activities that we're doing to go ahead and attract buyer leads is in fact going down. And it's not just on a team structure. We're seeing this across the board. The Zillows of the world are seeing a decline in market activity with traffic to their website and in turn active buyers. So then the second area we want to look at are number of showings. And so we're seeing that the first showing is actually done online, and we can tell because we've got 20 or 30 active listings at any given time where that average should be, and we're starting to see those numbers slip. And by the way, that's another reason it's very important to work with a team or a realtor that has a strong enough listing inventory that can identify some of these micro trends well before the general public to keep you ahead and to have a competitive advantage. Now the third area we're seeing are days on market. And very much like I mentioned, some of the markets are just flaming hot and homes are still selling in a matter of days, if not a week or two. And others are starting to go ahead and linger. And we're starting to see that happen much more in a pronounced level in that luxury market where people are coming out overly optimistic and they're not following the recommendations of the market. And so we're starting to see those days on market swell. So additionally, some things to consider is that there's some economic uncertainty. That economic uncertainty definitely creates an impact psychologically with our buyers, and it reduces their urgency. And so what we're seeing right now is buyers are looking at more properties and they're becoming more patient than they were in recent months. And so that's another indicator for us as well. The other thing we kind of mentioned too is active local buyer pools. They're starting to contract. Nothing extremely notable, but they are starting to contract. And we've got motivator sellers that if they're in competitive markets, that we're seeing some dramatic price reductions to go ahead and attract those buyers. And so what I mean by that, if they're in a market that has 15, 20, 30 people that they're in competition with, then in order to go ahead and present themselves as the best value, they're actually being very competitive on their price at this point to go and attract that buyer. And the other thing to look at is that we can look at our coastal areas, the people that we partner with on the coastal regions, and identify what's going on with their trends. They're usually a click or two ahead of us. And I can tell you in the east and the west coast, we're already seeing a market cool down in both of those markets. And so it would be reasonable to believe that we would fall in line. So what do we do? If we want to sell our home in this market, what do we do to stay ahead and have a competitive advantage? You know, here's the thing. It's a price war and it's a beauty contest. We've got to be number one in both, right? We've got to maintain and instill buyer urgency. The number one reason that a buyer is going to write an offer today is the merit of the home. So we need to make sure that we qualify that home with all of the buyers that might be looking at the home. And then the number two reason that a buyer is going to go ahead and write an offer is because they don't think the home's going to be there tomorrow. So if they don't think it's going to be there tomorrow, it's likely because of the features the home offers for the price. They fear that somebody else is going to come and buy it. So we've got to be competitive in both of those areas. The second thing we got to look at here is that we need to price in front of the market. There's a wives' tale that if it's on the market for 30 days and we don't see any offer, then maybe we need to do something with price or condition or exposure. The reality is that we've got 21 days to make a first impression, and in many markets it's even less than that. So it's just being informed with that market information and identifying what are the variables. What is it, exposure that we're having a challenge with? Is it a condition issue with the properties that we're in competition with, or is it price? And ultimately I can sum it up with one thing by saying just being proactive. This is a market where we have to be proactive to make sure that we're netting the most money in the quickest time frame with the least amount of hassle. Thank you so much. And if you'd like to go ahead and explore the market, please give us a call here at 636-534-8335.